So I'm an attorney, and the thing is, I'm not allowed to give recommendations. But I'll tell you what I do, because the reality is, investing has risks. You're never guaranteed to make money when you invest. I invest my money in 5 places. I invest my money into my own business and startups. I invest my money into real estate. I invest my money into stocks. I invest some of my money into crypto, and I invest some of my money into physical gold. This is the order that I invest my money from biggest to smallest. Now, I have 2 investment strategies. I have an active investment strategy and a passive investment strategy. And what I do is I passively invest my money into stocks, crypto, primarily Bitcoin, and physical gold.
Why gold? Why gold?
Gold for me is a hedge. I don't look at gold as an investment. I look at gold as an alternative to saving. It takes time, effort, and labor to mine physical gold. And I look at gold like alternative money. Money has 2 purposes. Money is either a store of value or it is a medium of exchange. Our paper dollars are a great medium of exchange, but they're a horrible store of value because of inflation. Our physical gold is a much better store of value, but a horrible medium of exchange. So gold for me is another way of saving hard money, and it's like doomsday protection. It's insurance. That's my passive investing. Now my active investing is where now I take money and I actively put it somewhere. Now right now my biggest active investments have been into my own businesses. In addition to that, I also actively invest my money into real estate. Again, I love real estate because it provides cash flow. I love investing for cash flow for those reasons, and I like real estate because, well, real estate gives you a tangible asset. And when I say investing in real estate, I don't mean buying a home to live in. I mean buying real estate to rent out. Then I would actively invest in stocks if I see a good value. If I find something that's undervalued, something that I believe is low in price, I would come in and buy. I also actively invest in startups. So it's a different way of looking at it. But when I actively invest, I'm not investing in ETFs. I'm investing in individual companies. I'm being a little bit more risky here, but I also see more potential returns. For the majority of people, they shouldn't be actively investing. They shouldn't be investing in individual companies, because if you're not going to be willing to do the research, if you're not willing to read the earnings calls, if you're not willing to keep up on the company, if you're not willing to put in that work, don't actively invest.
The audience listening may be hearing from you for the first time, so maybe if you could tell us a bit about who you are and what you do, that'd be great.
So many people know me now as the minority mindset. And growing up, like a lot of traditional Indian parents, my parents always told me that I needed to become a doctor. And eventually my parents were like, well, if you don't become a doctor, you have to at least become an attorney. I never had really support trying to be an entrepreneur. I never had someone guiding me on what to do, and yet you keep getting screwed over by these types of people. So I started a class on how to launch a business without getting screwed over. But it was just something to put out there to help people not get screwed over the way I was. And I did it under the alias minority mindset, thinking that you have to think differently than the majority of people if you want to be an entrepreneur.
Jaspreet, what is the best investment advice you have for young people, or maybe someone who's just getting started?
This is so important. If you start at 21 and you invest $4 a day, and you do this from the age of 21 until 66, and you just invest this money into the S&P 500, which is the general stock market, and you get an average historical return of 10% a year. This doesn't mean your money grows by 10% every year. It means this is the average. Some years it's going to be more. Some years it's going to be less. Some years you might lose money. Some years you'll make way more. Well, over the course of your career, that $4 a day investment is going to grow to more than $1 million investment portfolio, starting with just $4 a day.
Wow.
So now, if you have the ability to invest more, you can make even more. So create a system now where every time you get paid, some of your money is going to be automatically invested. And, the next question is, where do I do it? Well, This is where now things get fun. You can start very simple. Put it into the S&P 500, put it into the stock market. This has to be a long-term investment where you're not trying to time the market and pull your money out in 6 months if you see a crash or if you see it go down. The value with investing like this is you put your money in and you don't touch it. And you keep putting more money in and you keep putting more money in every time you get paid, every week, every 2 weeks, every month. You do this no matter what, whether the market's up or down. The only thing you change is maybe if the market goes down, you put in more, but you don't touch it. It's a long-term, multi-decade strategy. Now, if you say, but Jaspreet, I don't want to wait that long to see any returns. Well, let's go back to the simple formula, because building wealth, it's a very simple formula. Spend less than what you make and invest the difference. Period. Now, if you want to achieve more wealth, you need to invest more money. How can you invest more money? You can spend less money or you can earn more money. It's as simple as that. Now, there's a limit to how much less you can spend. There is a limit to how many costs you can cut, but there's no limit to how much money you can earn. So if you've already cut back as much as possible, and there's no other way that you can cut back, and you still want to invest more and you want to see the returns sooner, then you got to earn more money. Now again, how can you earn more money? Well, if you don't want to do it through starting a business or a side hustle, then you got to do it through your career. Are you at a job that will allow you to earn more money? Are you in a position that will allow you to earn more money? Maybe you have to get a certificate. Maybe you have to go back to school. Maybe you look for a different company. Maybe you look for a completely different career. Maybe you add on a second job. Now, I can't answer that question for you, but this is where you just have to be honest with yourself and see what type of life do you want to live, and are you being honest with yourself? And then you just plug in the numbers.
What is the difference in mindset between the rich and the poor?
Wealth is mindset before it hits your bank account. And when it comes to the differences between the rich and the poor, it doesn't start with how much money you make. It doesn't start with what degree you have. It doesn't start with who your parents are. It doesn't start with what background you have. It starts with what mindset you have. And this is really the root of wealth. It's your mindset. And what that means is now, if you go about life and you say, the government's the reason why I'm broke. My greedy corporation is the reason why I'm stuck at a job that I hate. I can't change my life because of X, Y, and Z. You keep pointing your fingers as to why you can't succeed. Well, it's going to be impossible for you to succeed. Likewise, if you go around saying, I can't have that nice thing because I'm broke. I can't have the nice thing because I grew up in a bad environment. I can never become successful because of the way I look. I can never do it because of whatever. I can guarantee you are never going to become successful. But if we turn this around and you say, how can I become successful? How can I make more money? How can I become wealthy? How can I get out of the situation that I'm in? Now your brain looks at problems completely differently, because of now you're not complaining about the problem, but you're trying to find a solution to the problem. And that's the biggest difference between somebody who becomes wealthy and somebody who does not. It starts with the mindset, because then once you change the mindset, you're going to start changing your actions. How is it that some people can become so incredibly wealthy while the majority of people don't? It's not that they have some special superpower. It's not that they own some special skill. It's not that they're so much smarter than people. It's not that they work so much harder. It's that they believe that they can, and then they use their time differently. We're all given 24 hours in a day. So the difference between somebody who becomes successful versus somebody who does not is now what input you put in those 24 hours. If you're spending your time on Netflix, if you're spending your time playing video games, if you're spending all of your time doing things that don't add any value financially to your life, well, if you compare that to somebody who's now working, who's now learning, who's investing in the education, you're going to see two completely different outputs. Now, this is where you don't want to get into the trap of just thinking, you know what, I'm just going to work really hard. I'm going to work 20 hours a day. Because, well, you can work really hard and still be broke. Now the question is, how can you make your hard work the most scalable? Because that's now what will take you from, okay, I don't want to be broke. So now you start working hard, which is great. I 100% recommend working hard, because without that hard work, it's going to be impossible for you to see any real level of success. But now you're working hard. The next question is, how can you make your hard work the most rewarding? What can you do to make that hard work give you the biggest dividends and the highest returns? And this is where people say work smart. You know, some people say work smart, don't work hard. I think that's a bunch of crap. I think you need to work smart and work hard. They go hand in hand. because that hard work is going to allow you to scale your smart work. But you now have to understand, okay, I want to become more financially successful. So now how do I do that? What is the financial education? What am I working for? When I make more money, what am I going to do with this money? Where am I going to invest it? How am I earning this money? What can I do in terms of taxes to protect my wealth? What can I do with my investments to scale them? What can I do to build an asset? What can I do to build a business? What can I do to scale the assets that I do own? So now you start asking these questions. And I know this is getting very deep in some of these topics, but it all starts with that mindset of believing that it's possible for you. Because if you don't believe it's possible for you, you're right. But if you believe it's possible for you, you're also right. And whatever your belief is going to change what output you take.
Yeah, no, absolutely. That's a really fantastic answer. I think from start to finish, mindset itself is so important. A belief in yourself. If I didn't believe I could do this podcast, I wouldn't be sitting here. If you didn't believe you could start Minority Mindset, even just to reach people, not even to make money, right? Like you were saying, it was just to reach people, to help people, to give them some additional financial literacy. And I think it starts with that belief. And then you said something interesting too, which is the action side, right? Like you do have to work hard. You have to work smart and not extremely hard. You don't have to break your back necessarily in most cases nowadays. But some really interesting points there that I really like. So thanks for sharing those.
Yeah, and you know what? Everyone goes through their own phases. And you talk about working physically hard. I went through that phase when I worked in the wedding business. Yeah, I played the drum, which was physical, but then I also was the person who was setting up the speakers, the person who was tearing down speakers. I was the person that was setting up the lights. I was sometimes working on the dance floors, and that was physical. I was lifting a lot of heavy stuff. See this pinky right here? It's still broken. I broke this because I dropped a speaker on it. You go through different phases of work. After that business, well, it wasn't a business. It was me working for somebody else. I then tried to start my own business, which was the event planning company. But what I learned later on is that I didn't actually build a business. I just built my own job, because the way that company worked was if I hosted a party, I would get paid. If I didn't host a party, I wouldn't get paid. So it relied 100% on me. Yeah, it was a good income, but it was reliant 100% on me. That's not a business. And then you start to think differently. Well, a business means that now you can build something where you can potentially hire somebody to take your job. That's the business. Because now you, as the business owner, you're not working for a salary. You're working for the profits. There's two different aspects to it. And not everybody has to go out and start a business, but everybody in America should be a business owner. Period. In the American system, it rewards business owners, and everybody should be a business owner, period. However, this does not mean that the majority of people should start a business, and this does not mean that the majority of people should operate a business, because the majority of people don't have it in them or don't want to operate or start a business. So how do you do that? Well, you invest your money. Now, for me, I'm an entrepreneur, so I started my own company. But what I learned is there's two different types of income in that sense. There's the income you get from your labor. I go to work to get paid. I start a company and I work in the company and I get paid. The second is the equity side. I get paid for my profits because I own the company. If you can't start your own company, fine. You can invest in stocks. You can invest in real estate. You can invest in whatever. Now, when these investments that you own or you start make a profit, you get your share of that. And this is money you're making not because you're working at a company, not because you're working in this business or asset that you own, but because you own it. That's where the real wealth is built. Wealthy people spend their money to earn more money. Yeah, the majority of everyone else spend their money to buy things, which makes everybody else around them rich.
Yeah, and then assets versus liabilities is a great conversation as well. Where do you put your money? Most people think buying a house or buying a car is an asset. Is it an asset?
You hear a lot of people in the middle class talk about how, oh my God, my home is rising in value. Why is that? Well, no, your home is not an asset because you are just buying it for the purposes of hoping that it'll be more valuable when you sell it. But there's no guarantee. Now, can your home be an asset? Sure. If you bought your home today for $200,000 and you could sell it in 30 years for $300,000, is it an asset? Sure, after 30 years because you sold it for a profit. But until then, it's a money pit. You have to pay for the taxes every year. You have to pay for the upgrades every year. You have to pay for the renovations every year. You have to pay for the maintenance every year. Between now, the day you buy it, and the day you sell it, it's a liability because it's just sucking money out of you. Does this mean you shouldn't own a home? No. It means understand what a home is. The way I look at home ownership, it's like me buying a shirt. I buy a shirt because I like the shirt, not because I think that I'm going to be able to sell the shirt for a profit. And the reality is the system benefits when you think the opposite. Because if you think your home is an investment, well, now what happens? Well, you're going to want to stretch yourself a little bit thinner to buy a bigger home. Because if your lender can lend you more money, well, might as well stretch it a little bit more because it's an investment, right? You can pass it down and build generational wealth through your home. That's the pitch. I used to be a real estate salesperson. I still am a licensed salesperson. I don't actively work as one, but I used to. And this is what we're all told, right? It's your home as an investment. It's the biggest investment you'll ever make. And when you think like that, you're going to think, if this is going to be my biggest investment, why not go bigger? Well, if you are going all in on the home that you live in, and now you're sacrificing your ability to actually invest into assets that can pay you, this might be stocks, this might be rental properties, this might be a business idea. Well, now this home, which was supposed to be an asset, is sacrificing your ability to own real assets. So no, because of that, your home is not an asset. And your car is absolutely not an asset because cars are some of the most well-known depreciating liabilities. As soon as you put your keys in a new car and drive it off the lot, it's going to lose 15 to 20% of its value, and it's going to continue dropping in value like a rock. Drive a car that you can afford, that you can pay for with cash. That way you don't have to pay interest on a depreciating liability. But we're told that it's an asset. In most P&L statements, in most bank statements, in most accounting statements, cars are written as assets. Well, that might be an accounting thing, but understand now for your finances, when you spend money, you want to prioritize buying real assets. A real asset is something that you're buying for the sole purpose of making money. You buy a home to live in, not for the sole purpose of making money, but for the sole purpose of making memories. If you can afford it, great. But just understand its real place in your financial system. And when you think like that, well, now, maybe you buy a little bit smaller, but now you have more money to actually invest into real assets, which will pay you, which means that maybe in the near future, you'll be able to buy a much bigger home and not have to worry about the price because you built the assets first.
Yeah. I really like this conversation and on assets, liabilities, and depends how you look at the system. In this conversation, it's almost like the real estate market is trying to sell you a more expensive house, right? What are some other ways that the system is keeping people poor?
So the first thing is just understanding what that means. What is the system? And the reality is, look, the system is what it is. And we try to assign an emotion to the system, and I'm going to explain what that means in just a second. But in reality, you have to understand that this is just what the system is. Lenders are in the business of lending money, period. They make money when they lend money. So it is in their best interest to lend you more money. A salesperson is in the business of selling something. It's in their best interest to sell you something bigger, sell you something more because they're on commission. The more they sell, the more money they make, period. And so now when you understand this way of thinking, you're going to start changing the way you start looking at things. What is a corporation's best interest? A corporation's best interest isn't for you to keep your money in your pocket and invest your money and be financially smart. A corporation's best interest is to now get you to open up your wallet and buy their stuff because that's how they make money. Does that make them evil? Well, I'll let you decide. I think, look, you don't need to decide an emotion. It just is what it is, because once you understand this, you're just going to look at the world very differently. Because when you understand the way the system works, now you can say, okay, so a corporation's in the business of selling me something. A bank's in the business of lending me something. A salesperson's in the business of getting me to buy something bigger. What do you need? I need the financial education to know what I can buy. Because guess what? We all need things. And when you have money, you don't feel so bad about spending money because you know how to control it. Now I can go to a corporation and buy the things that I want, that I like, and have a great experience because I can. I can go out and know when I should borrow money. Maybe I borrow money to buy other assets. You borrow money to buy rental properties. I borrow money to grow a business. Maybe I go to a salesperson and I have them sell my things for me. Now you start thinking about things very differently because you understand the way the system works. But the problem is that we're never taught this. We're never given any sort of financial education. So what ends up happening for the majority of people is you end up just being a pawn in the system. You just continue fueling the system because guess what? Corporations are going to get you to spend. They hire the best marketers in the world to get you to spend more money. You're going to continue borrowing money because guess what? Banks are in the business of getting you to borrow money. And they hire some of the smartest people in the world to get you to borrow more money, to create programs to entice you to borrow more money. Salespeople are the same way. They go through trainings after trainings to learn how to sell something. Again, this doesn't make them necessarily evil. This is just the way the system works. The system is fueled by spending. What we don't have, the problem is we don't have the education to then tell us when we should spend and when we shouldn't spend. And this is where I come in. This is where I talk about the financial education of just understanding this is what it is. It's like gravity. It's happening around us. Do you want to fight gravity or understand gravity? Because when you understand it, now you can take advantage of the system too. Because now when you understand this, well, you can own a piece of the system as an investor. And now you can benefit from the way the system works. Because now if we take one step back from this and we go just a little bit more higher level, guess what? Our entire financial system is reliant on this. What does that mean? Well, the reason my YouTube channel, Minority Mindset, became popular, my first video to go viral, this was back in 2016. I released a video talking about how inflation is making the majority of people poorer and they never see it happen. At that time in 2016, inflation was about 2% a year. And banks are paying 0.1% in interest. So the whole video was essentially showing, look, you put your money in the bank, you're losing 2% of your savings value every single year. It might not seem like a lot of money in 1 year, but over the course of your career, you were losing a lot of money by just saving your money in the bank, which is why inflation keeps so many people poor.
And why is that? Maybe just for the people who don't fully understand putting money in the bank versus inflation.
So inflation comes from the word inflate. What do you inflate when you have inflation? You're inflating the monetary supply. You're inflating money. So the Federal Reserve Bank is the central bank of the United States. While they're called the Federal Reserve Bank, they're not federal. It's not a federal entity. It says so on their website. They're not a reserve because they don't keep any cash reserves anywhere. And they're not a bank. You and I can't go there to deposit money. So what do? They control and oversee our money system in the United States. And one of the things that they're able to do is influence how much money is out there. They can print money and they can take money away. Well, when you print money, pieces of paper, without producing more wealth, what happens? The value of each individual dollar goes down. Because you can't just produce more wealth, you can't print more wealth, but you can print money. And so this money, this pieces of paper, then loses value. And we've been seeing this happen for a long time. Whenever you print more money, the value of each individual dollar goes down, which then in effect causes the price of things to go up. That's why $100 today cannot buy you what $100 could 20 years ago. And it's why $100 today can't buy you what $100 could 100 years ago. So when I released this video in 2016 explaining this, that was my first video to go viral because people were like, oh my God, 2% inflation. I understand this now. I should invest my money. Well, now here we are today going into 2023 with inflation much higher than 2%. And people are now really seeing the effects of inflation. But what does that mean when we go back to the topic of, the system that we were just talking about? Well, inflation the whole purpose of it, because the Federal Reserve Bank doesn't want 0% inflation. If you listen to anything that they say that they have a target of 2% inflation. But why 2%? Why this random number? Why not 0%? Why do we want any inflation? Well, because it's their way of growing this system. See, inflation disproportionately benefits the financially educated and the wealthy, and inflation disproportionately hurts the financially uneducated and the poor. Because when you don't understand inflation, well, you're the one that's paying the price. If you leave your money in the bank and your bank is paying you 0.1% a year in interest, while inflation is 5, 6, 7% a year, you're losing value in the bank. Your savings are slowly losing value each and every day because you're saving your money. Now, this doesn't mean you shouldn't save any money. This means you have to know how to save your money strategically. That means save your money for an emergency, save your money for an investment, or save your money for a big purchase. But then beyond that, why are you putting cash aside? Well, it should be to invest. But now going back to that question of the system, right? What does inflation do? It grows the economic system. It encourages more spending, more dollars out there. And so who does that benefit? It benefits the economy. It benefits the investors who own a piece of the system, but it hurts the people. Because if you don't understand this, what happens? Oh, maybe you got a raise because of inflation. Great. People spend more money. Great. But now you're poorer today than you were a few years ago. Even though it might look like you have the same bank balance, even though you might have gotten a raise because the prices of everything around you have gone up faster than your income. And that's why today you have people struggling more than they were 50 years ago. 50 years ago in 1970 or early 1970s, you'd have one person going to work, the man of the house, and they would have one income, and the one income would allow a family to survive comfortably, have a nice home, have a nice car, and have a nice vacation. Today, you have the majority of households are two-income households, and people are struggling to buy homes. People are struggling to afford a car. People are struggling to have any sort of freedom to go on a vacation or really do anything, even though we have two-income households today as opposed to one-income households in the 1970s. So what's the difference? The value of the dollar is dropping. This grows the system. This benefits people who understand the system, the investors, the financially educated, but it comes at a price. And the price is at the expense of regular people. This is why now, when you understand this, you have to change the way you look at money and change the things that you do use with your money. Because if you're making money just to spend it, well, now you're making everybody else rich at the expense of your own wealth. What I'm saying is make yourself rich before you make everybody else rich. I don't want you to never have the nice things. I want you to have the nice car. I want you to go on the nice vacations. I want you to have the nice home, but I want you to be able to afford it first. And right now, the most important thing financially is to make yourself rich first. And ironically, the people that are looking rich are sacrificing their real richness. But if you want to actually become rich, well, you're not going to be looking rich when you're trying to become rich. So it's kind of like ironic where the people that, when you spend all your money trying to look rich, you never have the opportunity to actually become rich.
And I think understanding that is really key. What is the best way for most people to get rich in 2023? The best return that I got on my investment isn't the real estate investments that I made, even though those have made me great returns. It's not the stock market investments that I made, even though they made me great returns. It's not the startup investments that I made. It's the investments that I made in myself. Because for me, the investments that I put into my own financial education have paid off many, 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 many times over. And you can't see those returns anywhere else. They say that the best investment you can make is in you. And for me, that was first by reading books. When I started my financial education journey, YouTube didn't have this level of financial education out there, or just general business education or whatever. So I started by reading books. Now you don't even have to pay the price to get a book. Just go watch as many YouTube videos
as possible about financial education, starting a business, about increasing your income, about investing, anything related to financial education, go start watching YouTube videos. You don't have to watch my channel. If you don't like it, watch whoever you want. I'd rather see you successful than anything else. So go watch as many videos as you can. You have a ton of videos as well. People should be checking these out. Once you start watching videos and you absorb yourself into this, now you might want something a little bit deeper, something a little bit more comprehensive. And this is where then start reading books. I would recommend that you go out and start by reading 25 books. Find the top 25 books in financial education and read them. Find the top 5 books in money management and investing, the top 5 books in starting a business, the top 5 books in scaling a business, the top 5 books in managing a business, and the top 5 books of entrepreneur biographies. And it doesn't matter which ones you pick, find the ones with the highest ratings, the highest reviews, and just read them. This is going to cost you less than $500. But when you do that, you're going to be able to get an MBA level education without paying the price of an MBA. And you're going to look at the world, your money, and the way you use your money completely differently once you finish these books. Now, once you do that, you can decide, what do you want to do? Do you want to go down the entrepreneurial journey, take the risk and do that? Or do you want to do it through your job? Either one is fine. For me, it was entrepreneurship because that's something I love. I love that risk. I love the whole journey with that. And I don't mind working hard and doing that. If that's not for you, fine. So for me, that's what it was. It was investing in myself. Now, for the people that don't want to be an entrepreneur, it's completely okay not being an entrepreneur. I want to put that out there first because I know kind of the internet makes it seem like everybody has to be an entrepreneur. It doesn't work like that. Not everybody is meant to be an entrepreneur. Not everybody should be an entrepreneur. But if you're not an entrepreneur now, what you want to be doing, and everybody should be doing this, is create a system where now every time you get paid, a piece of your money is going to be invested.
There's a lot of videos right now on YouTube talking about the upcoming market crash, the upcoming recession. It's really a common theme. Everyone is going to be wiped out. Is this true? And what do we do about it if it is?
Well, here's the thing. Nobody has a crystal ball to perfectly predict what's going to happen, but we can look at the trends. And here we are going into 2023, and we have the highest amount of debt ever. We have the highest amount of national debt ever. We have the highest amount of corporate debt ever. We have the highest amount of household debt ever. And at the same time in 2022, we raised interest rates at essentially the fastest rate ever. So now we have the highest amount of debt ever, and the cost of servicing this debt is growing faster than ever. What does that mean? Expenses will rise. Now, what you have to understand about that is too much debt isn't a problem until it becomes a problem. So the best way to explain that is to think about buying a home. Let's assume you bought $1 million home and you put down 10%. So you put down $100,000, you owe $900,000 on it. But let's assume now you see property prices fall by 20%. That now this home is worth $800,000, but you owe $900,000. Is that a problem? Well, no, assuming that you can continue making the payments. Because if you can make the payments, it doesn't really matter that you're underwater because you're still going to make the payments. But if now you lose your income because you got fired, you got laid off, your company went under, your company went bankrupt, now this is where it becomes a problem because now you can't sell because you have to bring $100,000 to the table and most people don't have that cash in the bank. You can't refinance because you're underwater and now you're stuck. This is when too much debt becomes a problem. It's when people or entities or businesses lose the ability to continue servicing their debt. Well, now we're facing a time where the cost of servicing debt is going to rise. Because while mortgages in America many times can be 15 or 30-year fixed rate mortgages, most other debts are not fixed rate. Most corporate debts are 1 to 5 year terms, meaning they readjust every 1 to 5 years. And then they're variable after that. Most of our national debt readjusts every 1 to 5 years. So that means in the coming 12 to 24 months, we're going to see way more debt readjust. Expenses are going to rise. Now again, no big deal, assuming you have enough income to justify the higher expenses. But at the same time, we're also facing a slowing economy. Because, well, for one, the rising interest rates are slowing down the economy. And for two, the higher inflation and higher prices are contributing to a slower economy. So we have an economy that's slowing due to the high inflation and due to the higher interest rates, while debt costs are rising, while the Federal Reserve Bank is also still increasing interest rates. Why are they increasing interest rates? Because they want to bring inflation down. But there's a consequence to that. You continue slowing the economy. So we have all these red flags ahead. It is my opinion. Now everyone has an opinion. You can make your own opinion. It's my opinion that we have more economic pain ahead. And I don't just think it's 2023. I think this is going to continue on because this debt servicing costs, we're not going to see the full effect of that just in 2023. It's going to continue happening into 2024. High inflation is not going away in 2023. Even the Federal Reserve Bank in December just admitted that they don't expect inflation to fall down to their goal target in 2023. They expect 2% inflation not to happen in 2023. They don't expect it to happen in 2024. It might happen in 2025. So we're going to continue seeing high inflation. We're going to continue raising interest rates, assuming they don't change their plans. And we have all these things happening at the same time. So it's my opinion that we're going to see more pain in the economy. And that's why I say you should prepare. You shouldn't freak out, but prepare. Now, here's the thing. Look, nobody makes a good financial decision out of panic or fear. But here's the thing about preparing. Preparing means two things: putting aside cash, and that also means getting financially educated. Now, if you prepare and nothing bad happens, let's assume the economy just continues to boom forever. Well, now all you did was put aside some extra cash. Now you can take the cash and go to Disney World, or you can invest it. So you have nothing bad happens if you prepare. But if the economy does go through more pain and you prepare, well, now not only do you have the ability to survive without much stress, but you also have the ability to thrive through it, because market crashes and recessions create more millionaires than any other time, because they allow you to now come in and buy assets, investments at a discounted price. But in order for you to do that, you have to be prepared, meaning you have to be educated to see the opportunity, and you also have to have the cash to take advantage of the opportunity. Most people lack one, if not both. They might have some cash, but they don't see the opportunity. Or they see the opportunity, but they don't have any money to invest. When the 2008 crash happened, I was very fortunate that I started to have a little bit of money, where the 2008 crash was at its bottom. This was around 2012. And I started investing in real estate then. Now, I was fortunate because of the timing, but there was people around me that had way more money than I did, but refused to invest in real estate because of how risky it was. Everyone said, why would you want to invest in real estate? It's making everybody go into foreclosure. It's ruining the economy. Real estate is risky. But for me, it was an opportunity, right? I saw the opportunity and I had a little bit of money and I started investing.
Yeah.
So now it's, what do you do? Now, you don't have to freak out. You could think nothing bad's going to happen, but still be prepared. There's no harm in preparing, because we have a lot of different factors. We have a lot of red flags flashing, and you don't want to be the person that reacts. It pays to be proactive.
Yeah, yeah, and get educated. And Minority Mindset's a great channel for that. So highly recommend to everyone listening to watch Jaspreet's videos on there. I've been learning a lot myself, even lately. So
well, thank you.
Yeah, for sure. When it comes to business and creating a business, you've been really successful with that side. What advice do you have to people who are like, okay, like I've got the investing side a little bit going on. I have a job. I like my job, but I'd like to start a business. What's your best business advice for this next year?
Number one, hustle. Number two, try to spend as little money as possible until you make money. So entrepreneurship is hard. You got to work a lot. And in the early days, I was working around the clock, 7 days a week, never took a vacation, never spent money. You got to be willing to work and understanding that it takes time. I say a decade of sacrifice. If you really want to see success in business, there's a lot of people on the internet selling this crap that you can do it in 6 months. Yeah, you can do it in 6 months if you put in the decade of learning how it works. But you can't bypass that effort of learning, that effort of going through the mistakes, that effort of everything. Yeah, education can shorten that time, but you can't bypass all that effort. Building a business takes a lot of effort, a lot of time, and a lot of work.
Yeah.
So understanding that, there's a lot of glorification of it out there, But the reality, it takes a lot of time and a lot of learning. The people who talk about, oh, I made $1 million last year and I'm flying in a private jet. That's complete crap. It doesn't work like that. The first time I made $1 million in a year, I reinvested almost all of it. I think I took home about $20,000 and reinvested everything else back into the business, because if you're building a business, you have to keep growing the machine. You have to keep oiling the machine. You have to keep taking care of the machine. You have to take care of employees. You have to grow. If you start stalling, you start dying. And as an entrepreneur, you can't just, if you made $1 million a year and you take all of it out and you start flying in private jets, which by the way is a horrible financial decision at $1 million a year. I mean, you can't afford flying in a private jet at $1 million a year. But if you start taking your money and you start doing these things, well, you're taking all the lifeblood out of your business, because that cash is the lifeblood of your business. And then what happens if things hit the fan next year? The economy slows down. You start driving revenue. What are you going to do? You're going to let everybody go and shut the business down? I mean, it's a matter of really now understanding that it takes a lot of nurturing. And now, just like you have your own emergency fund for your personal finances, you got to build an emergency fund for your business. Because now when you have employees relying on you, well, if you stop making money, what are they going to do? They got to get paid too. So you have expenses you have to account for. You have growth you have to account for. And you have to love it. Don't start a business because you think you're going to get rich. Start a business because you love the passion, you love the purpose. And when you do it for the purpose, you're going to be willing to make the sacrifice. If you do it for the money, you're going to get burned out very quickly when you see how much work it really takes.
Yeah. Purpose, passion for what you're doing, what that business is just so important, because it won't last, right? And trying multiple things and working hard work works. And like
you got to work hard, man. I don't recommend what I do to anybody, but when I started, because I had people I needed to prove wrong. I had the whole world telling me that I could never be an entrepreneur. I had everybody telling me that I was dumb for trying to leave the comfort of trying to be a doctor. I had the whole world telling me that I was throwing every sacrifice my parents made for me away. So I had to work because I knew I didn't want to let that be reality. And I worked 20-hour days, 7 days a week. That meant I was sleeping 4 hours a night consistently, because I was going to school full time. I was working on my businesses full time. When I was running my event planning company, to put this in perspective, on Fridays, I was in class during the daytime. After the class, then I would go to the club or venue or wherever to set up. And now you set up, the party probably starts at 10 p.m. Friday night. I'm there early to make sure everything's set up. Party ends at 2 a.m. Friday night, Saturday morning. So now I'm there from 10 p.m. to 2 a.m. But now you don't get to leave at 2 a.m. because everybody else has to leave. So you wait for everybody else to leave. This might be 2:30. Then now you have to tear down, pack everything up and leave. If we're quick and we can leave by 3 a.m., that means I'll be home by, say, 3:30, but we would usually go out to eat and have some fun. So I'd be home by 4 a.m. And now it's Saturday morning, 4 a.m. And Saturdays are weddings. People get married. And I'm working in the wedding business. And weddings start early in the morning. So now by 8 a.m., I got to be at the wedding to start setting up, because the Indian weddings, they start early in the morning. You have the processions early in the morning. So I got to be there ready to go. So now you got to get up early, get to the wedding, get started at 8 a.m. And the wedding is all day long. So now you're there from Saturday, 8 a.m. to midnight. And now you tear down, pack up. Sunday, 1 in the morning, 2 in the morning, you leave to go home. I go home, you go to sleep, you wake up, you start your study, and you get back to work for the next week. Towards the end of my college career, I shut down that event planning company, even though I was doing well with it, because I just hated the industry. I hated being around that whole space because it just didn't feel right to me now. I was making good money, but I hated the whole idea because I didn't like drinking. I don't drink. I never drank. I didn't like being around alcohol. I didn't like being around that party scene. So it was like a way for me to start. It was a hustle. But then I was like, I can't do this for the rest of my life. So I got away from that. And I tried a bunch of different businesses. And along the way, I got screwed over plenty of times. Sometimes I got scammed. Sometimes I was lied to. Sometimes it was just completely screwed over. And when I was in law school, I had launched a company. It was a sock company that I was working on. And this sock company when I launched it, I was approached by this marketing company who had promised me these huge returns. They promised me all these things. And I said, okay, what happens if it doesn't work? And they said that they have a 100% money back guarantee. There was an expensive thing, like it was an expensive marketing consulting fee that I'd have to pay, but they said, don't worry, if you're not 100% satisfied, we'll give you all your money back. Now, I'm a marketer, so I was really kind of like hesitant because I like doing the marketing myself, but I gave them the money. It was a few thousands of dollars. I think it was like $3,500, which was a lot of money for me then. Mm-hmm. And I remember the next day I was in the gym and I was doing chest flies and I had a really bad feeling about it. I was like, you know what? I just want to do it myself. Like, it just didn't feel right for me to hire someone else to do the marketing when I could do it myself, and I like doing the marketing. So I called up the guy and I said, you know what? Let's just cancel this here before you spend any money, before there's any loss. Just give me the money back because I just want to do it myself. And long story short, he hung up on me. They blocked me and they took the money and ran. Apparently it was a scam company. It wasn't a real company. And my money was gone. Now at this point, I was like, what do? Do you cry, complain? We launched the company. We had a great launch, blew past expectations. But I was still like, I had this thing in the back of my mind that was like, this is so frustrating. Like, I never had really support trying to be an entrepreneur. I never had someone guiding me on what to do. And yet you keep getting screwed over by these types of people. So I started a class on how to launch a business without getting screwed over. And I really care about making money. I think I charged like $7 for the class on Udemy, but it was just something to put out there to help people not get screwed over the way I was. And I did it under the alias minority mindset, thinking that you have to think differently than the majority of people if you want to be an entrepreneur. Well, a lot of people joined and they really enjoyed it. And they said, Jaspreet, can you start a social media page? Because we want to see more. I was like, okay. So I started an Instagram page called Minority Mindset, posting the same type of stuff. And then I started talking about financial education, a little bit of money management and investing, because that was something that, I never grew up learning. No one told me about, but I was interested in. And then I would start getting comments and messages of people saying, can you start a blog? That way there's more in-depth content, because there's only so much you can read on an Instagram post. And I was like, well, English is my second language. You're not going to want me to write a blog. So no, but I don't mind talking. So I ended up starting a YouTube channel called Minority Mindset, not really knowing what I was going to do with it. I didn't start it with the goal of making money because I was already busy with my other businesses. And slowly that started to take off. And now I had to make the decision. Do I want to do something that's not making me money, but I love, which was Minority Mindset? Or do I want to continue running a sock company, which I really don't care for that much, but it's making me money? And so I decided to kind of follow passion here. And then Minority Mindset started to grow. And then this spun off a number of different companies, one of which, like you talked about, is Briefs Media, my newsletter company, where we have like Market Briefs, my daily financial newsletter, which is a free newsletter for investors. And that kind of just kept growing. And now here we are. I mean, it's a grind, a real grind you have to go through. And, everyone's different. I can't do that same 4 hours of sleep in a night now. I need more sleep. I need more rest. That's why I don't tell people what to do, but you got to be willing to put in the work that nobody else does. Because if you're not willing to do that, you're going to be outworked and you're going to get beat.
Yep.
And business, it's a war, man. Everyone's out there trying to beat you. And if you're not willing to put in the work, then someone else is going to come in and they're going to beat you.
Jaspreet, thanks. We love what you do at Minority Mindset and what you're creating with Market Briefs and growing your businesses and your companies. I think you are really helping a lot of people. Where can people find you?
I appreciate that, man. Well, if you want to check out my newsletters, go to briefs, briefs.co. You can check out Market Briefs or Business Briefs over there, Market Insiders, and Minority Mindset everywhere.
Awesome. All right. Well, thanks for joining us on the show.
Thank you so much for having me. It was an honor.